Hey, it is Troy Stavros, and it is time to go over all the data that we got in through October in regards to the Knoxville and East Tennessee housing markets. Let's take a look and see where we stand as of through the end of October. Okay, East Tennessee. Single-family homes, so we're looking and comparing October of 2023 to October of 2022. Home sales are down 10.8%. Pending sales are up 7%, so that's good. That's a big change since we've seen over the last few months. Pending sales have been down, but we saw those tick up this month. Inventory of homes is down 3.1%. So we are gaining traction back and almost coming back to where we were last year as far as inventory of homes in all of East Tennessee. We'll see that's different in different parts of East Tennessee, but as far as a whole, we're almost back to where we were last year as far as inventory of homes. New listings are up 6.2%, also a good sign. We have been down the last few months, so this is the first time we've seen that tick up in quite a few months. So we're seeing more new listings coming on the market. The median sales price in all of East Tennessee came in at $350,000. That is up 11.11% compared to 1 year ago. So we are continuing to see home prices move upward because of the low amount of inventory that is available on the market. Even with reduced demand, we are still seeing home prices increase. As we can see here, in all of East Tennessee, home prices are up 11.11% compared to last year. And again, coming in at $350,000. All right, let's take a look at some of the data for East Tennessee. So when we look at the active listings here, we can see that ever since May, we've seen listings increasing and they have yet to roll over. Typically, we'll see them roll over right around this time of year, if not sooner. But because of what has been happening in the market, we're still seeing them increase. So I would expect to see it roll over probably within the next month or so and start seeing this number coming down again, heading in to the winter months and the holidays. When we look at the pending listings, we can see those had been coming down since May and dropped pretty considerably last month. But then between September and October, we saw them tick up just a little bit. So not really going down anymore, just a little bit of a tick up. So that is good news as far as pending sales go. And then as far as sold listings, they've been bouncing around, but they've stayed pretty steady. They came down, and as of last month, they ticked down a little bit. Again, that's not uncommon for this time of year as we head into the winter months, but definitely something we will keep an eye on. As far as listing prices, when we look at the active median list price, we can see that it had been going up and just continued rising till we hit about July. And then it stayed pretty level and is continuing to stay pretty level with a little bit of an increase between last month and this month. So prices are not going down. They are staying pretty steady and still maybe actually ticking up a little bit as far as the active median list price. As far as the new list prices, these are the prices of new listings hitting the market. We can see these continuing to increase. They were increasing up May through June, started coming down a little bit until August, and then started moving back up again and saw a pretty big increase between last month and the end of October, going from $375 to $399 as far as the new median list price of homes coming on the market. So this is always a telltale sign for how a market is doing. If new list prices are increasing and they're above where they were the year before, which we can see they're pretty far above where they were the year before, that tells you that the market is doing well and that prices will not be coming down at least anytime soon unless there's something drastic that happens with the economy. But this tells us that our market is doing pretty good here in East Tennessee. As far as the pended median list price, those have stayed pretty darn flat. You can see how flat that is right there. So those are staying pretty stable. Sold median list price, you can see this was trending up since April, and then leveled off here, came down, and then started ticking back up over the last month. So things are looking pretty good here. Right now in East Tennessee, we're not seeing anything that needs to be alarming, but things are showing pretty good. As far as the absorption rate, you'll notice that correlates pretty much the same with the active listings. We are seeing the absorption rate increase, but we're still only in all of East Tennessee at 2.73 months worth of inventory, where a healthy market is around, a balanced market is 6 months worth of inventory. But we're going to talk a little bit later how this market actually is balanced. So stay tuned and we'll talk a little bit about that. But as far as this number goes, this is definitely a low number as far as the amount of inventory. This measures supply and demand. For the list to sold price ratio, when we look at how things are shaking out as far as where people are buying as compared to the list price, obviously the 100% would be the list price. And as of last month, they were coming in at about 98.1%. So you are definitely seeing more negotiation happening off of the list price. And then when we look at the original sales price, you can see there are definitely some reductions happening because we're actually about 95.7% off the original list price in all of East Tennessee. Again, this can change and vary from region to region in East Tennessee, but as a whole, we're definitely seeing more negotiation happening here in East Tennessee. Let's take a look at Knoxville as a whole. Again, this is everything with a Knoxville, Tennessee address. October last year compared to October this year, home sales down 6.2%. Pending sales are up 3.5%. Again, that's good news. Not something that we've seen in a while. Inventory of homes is still down 8.4% compared to last year. We're still lagging last year in the inventory in Knoxville. Because of that, we are seeing the median sales price continue to increase. Median sales price came in at $374,900. That is up 11.91% compared to last year. So prices continuing to rise in Knoxville. This is a big number. New listings are up 22.3%. So we're seeing more listings come on the market. That's good news for buyers. And the average sold price per square foot in Knoxville came in at $204 a square foot, with the absorption rate coming in at 1.62%. That is up compared to last month where we were at just 1.5%. Let's jump over and take a look at the numbers and graphs for Knoxville. Okay, so this is Knoxville. Let's take a look here. Active listings continuing to rise. Again, they have not turned over and have not started going down for the winter months, so we're seeing more and more inventory come on the market. As far as pending listings, those are coming down, but again, that is not uncommon for this time of year. And then as far as sold listings, same thing, they kind of came down and held steady compared to last month. When we look at listing prices, the active median list price has been holding pretty steady over the last 4 months. You can see we came June, July, August. It just ticked up a little bit here, but prices are not going down. They're just being steady to rising as far as the median list price. When we look at the new median list price, like we did for all of East Tennessee, in Knoxville, again, it was holding steady, actually came down a little bit, and then saw a pretty big jump the last month from September to October. So again, but still considerably above where they were last year. So market is doing well as far as pricing goes. Median list price came down over the last 6 months, but then again has trended up a little bit over the last month. So again, prices are doing well, and sold median list price, we saw them increasing, started coming down in June, and then leveled in September, and then started ticking back up again over the last month. And a lot of this has to do too with interest rates. You'll see a lot of this correlates with big shifts in interest rates. This month here, from August to September, we saw interest rates jump up into 8%. So that's not surprising that we saw a big drop there. And then they mellowed out a little bit recently. So you'll see prices start to tick back up, and you'll see sales start to tick back up because people are very attuned to what is happening with interest rates. As far as the absorption rate, again, we're seeing that increase, but in Knoxville, we're still at only 1.62 months worth of inventory, which is extremely low, which is why we are seeing prices hold steady and continuing to rise. As far as the list to sale price ratio in Knoxville, here is the 100% range, which we were at just in August, but over the last 2 months, we are seeing more negotiation happening for sure. And again, that is due to what interest rates are doing. As interest rates fall, you will see more activity in the market. And when there's more activity, there's more competition. So you would see prices go higher. But the opposite holds true. When there's less competition, then there's more opportunity to negotiate, which is what we saw here over the last 2 months. And then when we look at the original sales price ratio, we do see that there are some reductions happening here as well. And I'll show you that over here on this other graph. When we look here, this is showing us what's happening in Knoxville. You can see this is the market action index, which is a barometer of supply and demand. You can see that it ticked down compared to last month. So it moved a little bit to the left. So the further left you go, the more of a buyer's market it is. The further right you go, the more of a seller's market it is. And it's really not a buyer's market until this needle gets down below 30. So you can see we're still in a strong seller's market, but it's a little bit less of a seller's market than it was last month as far as supply and demand goes. And you can see when we look at the market action index over time, how high it got in 2021 and in April of 2022. It was extremely high. It was a crazy seller's market. But since then, with interest rates doing what they've done, it has definitely moderated and come back up and then is working its way down. And you can see these shifts typically happen this time of year. It always becomes a little bit more of a buyer's market when you get into the winter months because there's just more opportunity for negotiation to happen then. But you can see this is coming down. I would expect this to come down and then maybe trend down a little bit further. And then as we enter back into the spring, it will work its way back up again. But we were talking about price reductions. If we look at the price reductions in Knoxville, you can see they are definitely trending up. As of November 10th, which was just this past Friday, just under 50% of all the homes on the market in Knoxville had a price reduction. So half of the homes in Knoxville have had a price reduction that are on the market, which is a pretty big number, but not that different to where we were about this time last year. And again, you can see that this time of year is when you see the most price reductions historically. So even back in 2019, November, December is when you saw the most price reductions. And this is what you could probably say would be a normal number because this was pre-pandemic. So maybe around that 40 to 44% range, 42 to 44%, 44% range. This was pre-pandemic. Then these were the crazy years. And now, right now, we're at about 47, 48% was last year. And this year, right now, as of Friday, we are at about 49%. So that's about the highest that it has been as far as price reductions. So you can see the low demand is definitely affecting the market, but it's not necessarily affecting prices very much. And also this varies as far as different segments of the market. When I break this into segments of the market, so for example, these are the 4 segments of the Knoxville market. The lowest segment, the median price of the lowest segment is $274. The next segment up is $416.9. The next segment up, it's breaking it into 25 percentiles. It would be $549.9, and then the highest would be $949.9. When I break these reductions into those segments, you can see they're all pretty high, but interestingly, the lowest is the luxury market that comes in at just 45%, but they're all right there between 45% and 52%, with the highest being the upper 90-day, which is this right here, the 550 price range. They're seeing the most price reductions right now. Also, just looking over here on the right, this gives us a barometer of what's happened over the last 90 days. We've seen list prices come down and moderate. They're working their way down. Not uncommon again for this time of year. The median list prices have held pretty steady to going up a little bit. So again, that tells us the health of the market. If median new list prices are trending higher, that means that the market is doing well as far as pricing goes. Prices aren't going down. When we look at the price per square foot, that has held pretty steady over time. Along the median days on the market has held pretty steady. Price decreases, they definitely went up over the first half of this and then have held pretty steady at about 50% over the last couple months. When we look at the inventory, we've seen inventory rise over the last 3 months. Median rent has held pretty steady, and the market action index has slowly been working its way down, but again, is still in a strong seller's market. So there you go as far as that. Let's take a look at what is happening in the counties surrounding East Tennessee. Okay, looking first at Roane County, the available inventory is up 5.7%. Pending sales are up 3%. The median sales price in Roane County year over year was actually down 2.55% and came in at $282,500, with the median sold price per square foot in Roane County coming in at $170 per square foot. In Knox County, available inventory is down 9.3% compared to last year, so definitely less inventory in Knox County from 1 year ago. Pending sales, however, are up 3.4%, and the median sales price in Knox County is up 10.61% compared to a year ago and coming in at $368,319. And the median sold price per square foot in Knox County was $204 per square foot. In Anderson County, available inventory is up 9.1%. Pending sales are up 29.7%, so quite a few more pending sales in Anderson County last month. And the median sales price is up 30.53%, quite a bit. And the median sales price in Anderson County in October came in at $306,750, with the median sold price per square foot at $191 per square foot. In Loudoun County, the available inventory was down just a tick compared to a year ago, down 0.9%. Pending sales were actually flat and even compared to a year ago, and the median sales price in Loudoun County was up 31.92% compared to a year ago and is coming in at $499,950. In Sevier County, available inventory is up 9.74%. Pending sales are down a whopping 26.42%. And the median sales price is down 8.74% and coming in at $527,000, with the median sold price per square foot in Sevier County coming in at $325 per square foot. I'm going to show you something in a little bit about why the median sales price and pending sales are down so much in Sevier County in a few moments. It's interesting and pretty eye-opening when you look at what I'm going to show you compared to the other areas around East Tennessee and why we're seeing prices come down and pending sales drop so bad in Sevier County. And then finally, Blount County, available inventory is up 5.5%. Pending sales are down 7.2%. And the median sales price is up 9.3% and coming in at $365.50. So definitely things are plugging away in Blount County, with the median price per square foot there coming in at $221 per square foot. Okay, let me just show you real quick what I was talking about When we look at Knoxville's inventory, this is what it looks like compared to pandemic years, right? Pre-pandemic was 2019. We had about 3,000 homes for sale. But right now, we're considerably less than that. Right now, in the Knoxville metro area is only about 1,854, so well below pre-pandemic level inventory. When we look at what is happening in Sevier County, pre-pandemic inventory was here at 713. They are considerably higher as far as inventory goes. So because there is more inventory, supply and demand tells us that prices are going to go down there. So if you look around at the different areas, this is always a good gauge to look at and see what is happening as far as inventory compared to pre-pandemic levels, and it will give you a pretty good sign as to what is happening in the market. Because inventory is so much higher, prices will be going down. One of the areas in the country right now that is seeing the biggest drop in prices is Austin, Texas. So, for example, if we look at Austin, Texas, let's see what the inventory is doing there. Again, there, 2019, they were here. Their current inventory is way up here. So that is a direct correlation as to what is happening as far as areas that are seeing drops in prices and areas that are not. So again, you saw what was happening in Austin. You can see what's happening here. You can see what's happening next door in Sevier County. Inventory's higher. And then you can also, like, even if you go over to other parts of Tennessee, they're starting to catch back up, which is why their market is not doing as well price-wise as East Tennessee is, because their inventory levels are starting to get up closer to where they were pre-pandemic. So that's just something to remember and think about. Okay, so that is what is happening locally, and basically as far as the numbers go, I just want to give you a summary kind of what else is happening in the market in East Tennessee and in Knoxville. Okay, so real estate market continues to shine in the national spotlight, the Knoxville real estate market. It's securing a formidable second place in the FHFA's ranking of the top 100 metros for median appraised value growth of single-family homes in the second quarter of 2023. This impressive 9.1% increase from the previous year not only reflects the area's robust market dynamics, but it also significantly surpasses the national median, which actually saw a slight decline. So Knoxville saw a 9.1% increase, nationally saw a decline. Again, shows you how robust our market is here in East Tennessee. In a notable achievement, the Knoxville metro area climbed to the 18th spot in the prestigious Wall Street Journal Realtor.com Emerging Housing Markets Index for fall of 2023. This index, revered for identifying top-performing markets, underscores Knoxville's appeal with its low living costs and flourishing economy. So, again, not only is the FHFA ranking telling us that Knoxville is doing well, but here's another one, Wall Street Journal Realtor.com Emerging Housing Market Index. The rental landscape in Knoxville is also evolving. After a remarkable near 20% growth in apartment rents in the third quarter of 2022, the pace has moderated, and I'm sure renters are happy to hear that, with a 4.5% year-over-year increase in the third quarter of 2023. This trend is in sharp contrast to the national average, which saw a mere 0.04% increase, highlighting Knoxville's unique rental market trajectory. Again, yet another place, Knoxville is a step above what is happening nationally. So, another reason not to listen to the national news for your local real estate information and what's happening locally. Knox County emerges as a tax haven, boasting one of the lowest effective property taxes in the U.S. at 0.32% in 2022, as per Adam Data's analysis. This factor, among others, continues to attract homeowners and investors alike. Despite the market's overall vitality, approximately a quarter of homes still sold above asking price, a slight decrease from the previous month. Remarkably, over 10% of these sales were at least $10,000 over the listed price, indicating a strong buyer interest and competition. So yes, attractive homes that are sought after are still seeing multiple offers and are selling for over list price. So keep that in mind when you are making offers. Talk with your agent, or if you don't have an agent, we'd love to help you, about what the competition is for a particular home. That's going to help you base your negotiation and make sure that you're doing the right thing to get the home that you want. There might be an opportunity for some homes to have negotiation, but there are still some that are selling for multiple offers and above list price. So you have to know what you're dealing with. While 2023 has seen a general slowdown in East Tennessee's housing market, it hasn't dampened the region's growth, especially when compared to cities like Nashville and Memphis, which experience declines in home values. However, the Knoxville MSA witnessed a significant 27% drop in purchase appraisals from the previous year in the second quarter of 2023, this reflecting a wider impact of increasing mortgage rates and limited inventory on buyer activity. Looking forward, East Tennessee faces a challenging environment with higher mortgage rates, which are near their highest since the early 2000s. The average monthly payment, given a 20% down payment for a median price listing, the median price in East Tennessee now being $449,900, has surged to $2,492 per month as the average monthly payment on a median-priced home in East Tennessee. Despite this, the tight supply continues to propel home prices upward even as sales volumes decline. With mortgage rates hovering at around 7.5% and buyer expectations set around 5.5%, the market has a critical juncture. We know this from a study that recently came out that said that most buyers are waiting for interest rates to get to 5.5% before they want to buy. That's almost a 2% difference. So that's why a lot of people are sitting on the sidelines. Now, we might not get to 5.5% for years, and by then prices will have increased. So I don't know if that's a good strategy. But definitely, if you have questions about that, feel free to ask, comment, and we can have that discussion. People think that 5.5% is what rates should be, but current mortgage rates, while they're higher than recent averages, are still below the long-term historical average of 7.7% since 1970. This context is vital for understanding the evolving dynamics of homebuyer attitudes and the enduring appeal of homeownership. As for today's mortgage landscape, rates have slightly decreased to 7.4% from just over 8% last month. This fluctuation continues to influence buyer decisions and market trends. The Knoxville real estate market, reshaped by the pandemic, has witnessed shifts not only in home prices, but also in inventory and population and median income, further cementing its position as a dynamic and evolving market. You can see here over time the population, it would trend up. It was trending up, and it came down. Pre-pandemic, it came down. But then this is just over the last 2 years. This isn't even counting 2022 to 2023, which also saw a big uptick. But look at the jump in population between 2020 and 2022. That's a significant jump. So we have more people coming into the area looking for houses, which also obviously has a direct correlation on what happened with prices. So let's just look at what happened with home values over that time. Here's that same period. So we saw the population increase. A bunch of people came in that were buying houses. So that increased the prices of the houses. But the other thing to keep in mind when we talk about affordability is the population that came also brought higher paying jobs with them. Many people were working from home. So when we look at what happened over the last 2 years as far as the median household income, look what happened over that same time frame. It was just plugging along, maybe a little bit of an increase, couple $1,000s over 3 years. Well, from 2020 to 2023, there was a big jump in the median household income because of the amount of people that were moving in that had higher paying jobs, again, affecting what the affordability is because people were paying more for homes, driving home prices up, bringing inventory down. So it's all a big snowball as to what happened with house prices. Finally, let's just take a look here. In a reassuring sign for the Knoxville area, auction.com's analysis predicts a low risk of home price correction. This prediction, based on foreclosure auction data, indicates a significant reduction in the foreclosure sales volume compared to 2019 levels. So compared to pre-pandemic, foreclosure sales volume is much lower than what it was then. So while many want to say we're in a huge bubble that's going to pop, here are just a few reasons why that might not be true. Let's take a look. Again, we talked earlier about one of the big reasons was inventory. In Knoxville, the metro, our inventory levels are considerably below what they were pre-pandemic, unlike some other areas like we showed you, Austin and Sevier County, that are struggling with that right now. So right now we're in good shape. So that inventory number is a number that we need to follow closely to make sure that it is not spiking. If it spikes, then that's when we need to start worrying. But as of right now, we are in a balanced market. It's hard to believe, but we are in a balanced market. Balanced meaning inventory is significantly low, but demand is low as well. It's actually balanced. But that being said, if one of those changes, if for some reason something happens and inventory goes way up, then we are going to see things swing. If we go back to the market action index here, if we look at this arrow, if there's more inventory, then this arrow is going to swing to the left because there will be more inventory for buyers to get. That way it'll move closer to a buyer's market. But if inventory stays the same, and let's say interest rates go down, then you can expect this needle to go to the right because there will be more demand, and thus it's going to be more of a seller's market and prices will continue to rise. But right now, because there's low demand and low inventory, that needle stays in the middle and it gives us a balanced market. And then the last thing I want to kind of show is, again, why this isn't 2008. Every year since 2012, people have come out and said that we're in a bubble because they remember the bubble. The bubble was a huge thing. The downturn in 2008, everybody remembers it. They think it's going to happen again. So you can see since 2012, there have been reasons why people thought that year was a bubble. 2012, it was the shadow inventory. 2013, it was higher mortgage rates. 2014, qualitative easing was ending in October. 2015, there was manufacturing recession. 2016, home prices got back to the bubble high, so they thought that we were in a bubble again. 2017, they just said it for no good reason. 2018, 5% mortgage rates was the start of the bubble crash for sure. Then 2019, home price growth was cooling off. 2020, COVID-19 was going to cause the bubble. 2021, mortgage forbearance was going to cause the bubble. 2022, 7% mortgage rates was going to cause the bubble. Didn't happen. 2023, historically low housing demand is going to cause the bubble to pop. Again, here we are. That's just another reason. But if we look at some of those reasons, here's a chart of what things looked like during the bubble time compared to now. When we look at the mortgage originations by credit score, you can see back during the bubble times, you see a lot more of the blue and the pink and the red, which were accounting for credit scores below 719 all the way down to 620. And then you saw a good amount of 720, which is the gray, and then the light blue, which is 760 credit score. Okay, when you transfer that over to what are the majority of the loans that are happening from 2020 on? The majority of those were people with 760 plus credit scores, very few in the red, very few in the pink, a few in the blue, but again, the majority in that 760 plus credit score. So it is a completely different dynamic as far as credit goes, as far as people getting mortgages. So going into a foreclosure, people with the 760 credit score are going to be able to deal with paying their mortgage and not going into foreclosure more than the folks that did back during the boom that you can see on the left there. So this one reason why this is not comparable to 2008. Another one, this one, number of consumers with new foreclosures and bankruptcies. When we look at the amount of new foreclosures and bankruptcies leading up to the bubble popping in 2008, you can see that line was pretty high and going straight up. When you compare that same amount to right now in 2022-23, it's not even a comparison. So again, this is not 2008, and this is not the same scenario. Okay, so there you go. Hopefully all that's educational. If you have any questions at all about any of it, just reach out to me. Happy to answer any questions. Happy to help in any way that I can. I hope you are having a great day. I'll be updating you with information as I get it, but let's keep an eye on the inventory. We'll keep an eye on interest rates. Those are the big movers right now. We got good news today as far as the inflation report, which moved interest rates a good amount down to 7.4%. Who knows? We may keep moving that direction, but let's just keep an eye on it. If you have any questions at all, don't hesitate to reach out. This is Troy Stavros, and I will talk to you soon.